Why do student loans feel like a debt trap? Have you ever wondered why student loans can feel like an endless cycle of debt? Many people find themselves in a situation where they are paying off loans for years, feeling trapped. Let's break down the reasons behind this feeling. First, student loans often involve borrowing large sums of money to pay for education. This borrowed money must be repaid with interest, which is the cost of borrowing. Over time, this interest accumulates, making the total amount owed much higher than the original loan. Many borrowers take out these loans without fully understanding how interest works, leading to unexpected financial stress later on. One major factor contributing to the feeling of being trapped is the long repayment period. Student loans can take a decade or even longer to pay off. Some borrowers find themselves in repayment for 20 years or more. This long-term commitment can consume a significant portion of monthly income, limiting financial freedom and the ability to save or invest for the future. Another important point is that student loans are rarely dischargeable through bankruptcy. This means that even if someone faces financial hardship, they are still responsible for repaying their loans. This lack of options can lead to a cycle of missed payments, which can result in default. Defaulting on a loan can lead to increased balances due to added fees and interest, damage to credit scores, and even wage garnishment. Certain groups of borrowers are more vulnerable to this debt trap. Those who attend for-profit or non-selective schools often face higher default rates. These institutions may not provide a good return on investment in terms of job prospects and income. Additionally, borrowers who do not complete their degrees may find themselves with substantial debt but lower earning potential, making repayment even more challenging. To manage student loan debt effectively, it is essential to understand the terms of the loan. This includes knowing the interest rates, repayment options, and the consequences of default. Borrowers should consider income-driven repayment plans that adjust monthly payments based on income, which can help ease financial strain. Refinancing may also be an option for some, allowing them to lower their interest rates, but it is important to note that this can mean losing federal protections. Planning ahead is another key strategy. Estimating future earnings in relation to expected debt can help individuals avoid borrowing more than they can reasonably repay. Building financial literacy around budgeting, saving, and understanding credit is vital to prevent student loans from becoming a long-term burden. In summary, student loans can feel like a debt trap due to their long-lasting financial obligations, accumulating interest, and limited options for relief. Understanding loan terms and exploring repayment strategies can help borrowers navigate this challenging landscape.